I want to thank you very much for joining us. We got an exciting day today. We've got one of the best credit report advisors. I like to go credit report advisors because, I hate the term credit repair. I like somebody that, if you're going to advise somebody on something special like a life insurance policy or mortgage origination, that's what they specialize in. This guy, his name is Blair. He's going to talk about how can you get credit reports better. It's just that simple. All right. And he's going to talk about also, there's a Federal Trade Commission that overviews, in Washington, D.C., they overview these credit bureaus and they fine them. There's huge fines if they do bad things to consumers. And they're not pro-consumer. What they are is they're pro-subscriber, the people that pay them. That's what they care about. They don't care about you. And then there's a reason why the number one complaint to the Federal Trade Commission is because of consumer-related issues. So without further ado, I'm going to introduce Blair. How you doing, Blair?
I'm doing great. Glad to be here.
Well, I appreciate your time today. I know you've got a company and that's all you do. And you've been doing it for about 5 years, is that right?
Really almost 6, yeah.
Okay. Congratulations. 6 years. And and you really do enjoy your work, don't you?
Well, I do. I don't know how much we have talked before about my past, but I used to be a mortgage broker, mortgage loan officer myself.
Okay.
And I really enjoyed doing that because it was a way of helping people achieve the American dream, get into a house.
Yeah.
No different than, and the satisfaction is no different than a realtor who gets to help people get in a house. But I'm part of that process, that team. Well, when things began to change in 2007, 2008 in the whole mortgage industry, everything was up in the air. And make a long story short, because I don't want to give you the whole story, but I ended up in credit repair because, to answer your question, I didn't want to get out of that scene of helping people get into homes.
Right.
And what I found when I was a mortgage loan officer was that too many people would come to us to get a loan, and we had to turn them down because of credit issues or debt issues and so forth. And that we didn't really have a way at that time. My partner and I didn't have the expertise and the time to help spend time with them to build up their credit so they could.
Sure.
And eventually, so I decided that's where I was going to go. I was going to go help the person that had credit problems and wanted to buy a house but didn't know where to start because they were kind of like they're in the pit of credit problems. And, it's easier to maintain your credit. It's harder when you've got some credit problems and you got to get out of that pit. And so I enjoy helping people.
Great. Yeah. And we as a rent-to-own home advisor to buyers that just miss financing, they need 6 to 12 months to get their FICO score up. And they don't know even 3 little tips on how to get their credit better because they can't go anywhere to get the real information on how that FICO score actually gets increased. And a lot of them need, it's kind of like weight loss. They're dating again and they've been out of the dating pool for a while and now they got to lose some weight, but they don't know how to do it. And they need somebody to tell them how to do it the most effective way. And it takes a while. I always tell my tenant buyers, look, this is a 4 to 10 month journey you're on to get your FICO good enough, not just to get a mortgage, it's to get a good rate.
Yeah.
Because if you get a good rate, we're talking about tens of thousands of dollars in difference.
In interest payments. That's right.
Yeah.
It's interesting that.
I'm sorry. Go ahead. Yeah.
Oh no, I was going to say it's interesting that you brought up about giving some tips. The consumer laws were actually written for consumers, but anything that the government does, it's like the Fair Credit Reporting Act. It's an 84-page document written for the consumers. Now, who's going to sit around and read 84 pages so they know what their rights are and how to deal with the system? And so consumers people come into you on the rent-to-own, they could get on there and spend hours and go through this big learning curve and trial and error, and could conceivably, work on their own credit. But I have found that most people find that it's easier to come to someone who knows what they're talking about.
Well, we live in a society that, if there's a problem, we go to an expert. And you don't want to screw this up, by the way. And I've had people come to me and says, look, that rent-to-own stuff doesn't work. And I go, well, why doesn't it work? And they went to another credit repair company and some of these paper mill places that just send out dispute letters, and that's all they do. And they didn't get any meaningful results in their FICO score. And they go, well, everybody's just out to rip you off. So they're like burned too many times. And I says, let me, and I just tell them, I says, my grandmother used to tell me something, I'm going to tell it to you. He says, what's that? He says, if you believe you can or you believe you can't, you're right. And if you think all doctors are bad or all lawyers are bad or whatever, then, I can't work with you. If it's got that bad a taste in your mouth, you need to have a positive attitude in order to work with your credit improvement specialist that you're going to be working with. And you got to listen and implement and not be suspicious and doubtful. You need to have some faith. So why don't you rent for a couple more years and come back to me? And I just tell them that.
It's a team effort.
I'm not interested in working with somebody that's that negative. It's just not going to work. The credit improvement step is a critical step of our success. If it's not done right, we're dead in the water. We won't have a good reputation locally. Just for your information, our students, basically, I don't want them learning about credit. I want them to learn about how can we help that seller sell at top price? How can we help that buyer get to a point where they can get to the mortgage, but we don't want them learning about it because it gets in the way of their business. We want them to just get an expert and have faith that expert's going to do a good job.
Yeah. And that way you don't have to juggle so many things and not do any of it well. Best thing to do is
so many pieces to our puzzle when we market for leads for a seller that has no equity and they can't sell with an agent, and that's tiring right there. And the tenant buyer side is really tiring too. It's like being a property manager with tenants and all this other stuff. And if you had to also, it's kind of like the kind of student that I look for is kind of like an insurance salesman that really is good with people and dealing with ideas versus selling cars. There's talking about concepts. And credit's a concept. It's not something you can hold in your hand. And we want people to be able to paint pictures and use analogies. And to tell you the God's honest truth, we deal with some people that want to have their own business, but this is a belly button business. You got to go shake hands and say, hey, we're going to help you. We're going to take good care of you.
Yeah.
And not everybody isn't made to do that. They're not made to do that. Just, I'll ask you a couple of quick questions. I may already have the answers, but it's just for our group of people, especially our tenant buyers, but our sellers too. They need to understand, because some of our sellers says, well, how bad is their credit? And I tell the sellers, says, only one problem can stop a mortgage. It doesn't have to be a total messed up report. It can be just one thing, and it might not even be their fault. Right? You've probably seen that in your mortgage career.
Yeah. Yeah.
So, the big thing is that people should know, number one, Federal Trade Commission overviews the 3 bureaus, right?
Right.
and they're their boss, and if they do something wrong, they get fined, right?
Right.
Is it a $10,000 fine,
Well,
I think? Is that right?
Oh, yeah, there's various different fines, but well, here's the thing about the three bureaus, the credit bureaus, that a lot of people don't realize that the credit bureaus are for-profit companies.
Right.
They're not government agencies.
Mm-hmm.
Years ago, there was hardly any regulation on them at all, and their job is just two things. One is to gather all this information from creditors, sending them information about the client, the consumer,
Mm-hmm.
and then they gather it up and put in this nice little report, and then send it to their subscribers, which are other creditors, other banks and creditors who are wanting to make credit decisions.
Right.
And so you mentioned earlier that their goal really isn't the consumer. Their goal is who's paying for their reports, who's paying for their information that they've so, well put together and put into a nice little package to make a little profile of each consumer. And that's their commodity, okay?
Right.
The government came in years ago and said, and it's kind of been a process, and it's still very, very weak, but the government came in years ago and said, okay, you got to start caring about the consumer a little bit. You can't just think about the lender and your subscribers. You're dealing with consumers' private information, right? Mm-hmm. Personal and private information. So we're going to make some laws that says show you at least this is the minimum you got to do to consider the consumer. And a lot of that has to do with that they have a right to a credit report once a year, a free credit report once a year. Mm-hmm. There's so many. I'm not going to tell you. It's 84 pages.
Rattle them off. But tell them what the little guy needs to know. Yeah.
Well, that's true. I mean, everybody has a right to a free credit report once a year, and you can go to annualcreditreport.com and get your free credit report from all three bureaus. It will not have your FICO score.
Right.
Because FICO is another for-profit entity completely separate from the bureaus, and they have their own goals of how they're going to make money, which again is the lender or the potential credit giver, not the consumer. So you have to get your FICO scores and pay for those at another site like myfico.com or something like that. The other law that they said is that the credit reporting agency, every time you go and apply for credit, then by law they're supposed to supply you with a new credit report, a letter, and then a credit report explaining, showing you why you were turned down for credit, if you were turned down for credit. Okay. Another law that they did, thinking about the consumer in mind, is they said that every credit bureau must be able to, all the information on the credit reports have to be accurate.
Right.
And that the consumer, if they think something's not accurate, they have a right to dispute it.
Yeah.
And then the three bureaus have to come back and answer. And in answering that whether something is accurate or not, then they're going to have to do an investigation to verify the information. Okay? Then the third thing is that you can't have negative stuff on there more than 7 years, and 10 years for bankruptcy. And that's the other little main concept behind the Fair Credit Reporting Act in thinking about the consumer. I mean, think about it. If they didn't have those laws, they could keep that negative stuff on there your whole life, and you'd never be able to get credit again. Yeah. So
that's true.
Yeah. So
some of those, let's say the credit bureaus, some of them are a bit flippant. They'll say after you request an investigation, let's say a charge off or something. They'll just say, well, it came back verified, and that's it. And they don't have any proof that they actually talked to the subscriber. They're just trying to get rid of you, right?
That's right.
And that's a little bit of a kind of a bullying tactic that some of these credit bureaus use. And you've probably seen that quite a bit, right?
Oh, I call it a smoke screen, basically. They just throw in a smoke screen. They're hoping that the average consumer will go, oh, well, I don't know. I guess it's accurate. That's it. I got to accept it. That's right.
Yeah. So it's important that is one of the reasons why a good FICO coach to increase your FICO score. There's the value in that, because the average consumer, it's kind of like a lawyer yelling at a plaintiff that has no law background and say, well, because of XYZ statute, you can't do that. And they have no way of checking the statute to see if the guy's telling the truth. It's like,
that's right.
Okay, But one of the things that a lot of our tenant buyers worry about, they're going to sign a lease, they're going to sign an option to purchase agreement, and they got a certain time period to get their scores high enough so that they can get a mortgage. And their number one worry is, well, what if I don't get the mortgage? What if I can't get my credit better within that period of time?
That's right.
I was wondering if you can talk a little bit about the time frame that it takes to increase your FICO score.
Well, and that's a good question because, obviously
it's different with everybody too. I'm not trying to pigeonhole you into one answer, but let's say you had a light problem, a medium problem, and a severe problem, and you've seen the gamut. How would you answer that?
Well, a light problem would be somebody that, say, has a 600 score and they're trying to get above 640 to get a FHA loan. So there's just 40, 50 points that they're trying to get up. Okay. A medium problem is what we call somebody who probably needs to get a good 100-point increase. Mm-hmm. Maybe they're at a 550, 580 and they need to get above 640, 650. Sure. And then there are people that, just depending on their circumstances, unfortunately, they're in the high 400s on their credit score and they need to get a 650. We need to get above 640. I always try to shoot above 640, like 650 or 660, so we can be sure. Sure. So they need almost a 200-point increase. Right. And there's a reason. There could be two reasons that somebody is either a light case, medium case, or a difficult case or a challenging case is going to be based on their credit history and how many derogatories or negatives that are on there. Okay. Whether it be a bankruptcy, whether it be a repo on a car, whether it just be charge-offs, lates, it doesn't matter. But the number of derogatories you have over the last few years is going to make that big difference. Okay. But here's the key that a lot of people don't realize, and is that it can make a big difference, is they don't have enough positive credit. Yes. So people will come to me and they'll have, I only got these 3 negatives on there. How come I only have a 520 credit score? And I'll say, well, when's the last time you did anything on credit? Oh, we cut up the credit cards 4 years ago and we've paid cash for our cars and we don't do credit anymore. Well, that's why you have only a 520 instead of a 700, because you got to have credit to build credit, Yeah,
so I try to tell them it's kind of like your GPA, If all you got are D's and F's and you don't have any A's or B's to counterbalance that, you're going to have a really low GPA, and there's nothing we can do about that. But, if you partied a lot your freshman year and got a couple of C's and D's and you rehabilitated yourself, and you could see for 3 straight years you got B's and A's, you're probably a good risk for grad school, because everybody screws up in their freshman year. And your ability to do everything perfect. I mean, and this is where a coach comes in too. I know you've got wonderful resources to get new positives on your bureau as quickly as possible, that a lot of people don't have that knowledge. That's specialized knowledge that very few people have. Even if you walk into your Wells Fargo or Bank of America banker and say, how do I kind of counterbalance this bad history a couple of years ago? How can I rebuild it? They're not going to advise you very well. So Blair, how can we get new positives on the credit report? How can we do that?
Well, and that's a good question, because it can be kind of a catch-22 sometimes. You got to have good credit to get credit. So if you were to just go online and apply for any old Visa card or go to your bank and say you want to get a loan, you're probably going to get turned down if you've got bad credit, which is why we need to find sources where you can get some good credit to get on your credit report that don't run credit checks.
Okay.
And you might ask, well, why would they give me credit if they don't run credit checks? Because, how do they know I'm not going to just borrow the money and then run with it and never pay it back? I said, well, it's designed for helping people build credit. And as you can imagine, the interest rates are probably going to be a little bit higher in the beginning. But you remember, it's because you're trying to build credit, so it's a price you got to pay until your credit gets better. But more importantly is that most of the sources require a deposit, like they call it a secured credit card.
Right.
I've got 3 really good sources of secured credit cards.
Good.
All you do is put down $500 or something into that bank's deposit, account. That money's yours. And they give you a $500 limit on the card, and you use it just like a regular credit card. When you're using it and paying your bill, you don't know the difference between it being a secured card and a regular card.
Okay.
The only difference is that a year from now, 5 years from now, if you decide to close that card, you'll get your $500 back.
Okay.
And the whole time it's secured by that $500. And that's why the bank doesn't mind taking a risk on you, even though you may have bad credit.
Sure.
But the good thing is they report to all 3 bureaus.
Okay.
And if you make your payments on time every month, all you do is go out and get some groceries or a tank of gas with it, and then, make your payments every month. Don't go get in debt with it. Don't go out and buy a big screen TV for $1,000 that you don't need. Just use it for regular daily stuff. But you're showing FICO and you're showing the banks that you can revolve credit, that you can use credit, pay it back, use it, pay it back. And that will make your score go up a lot just by adding a couple of those on there. So
good. That's and I've heard of this thing like bank round robin, where you get $1,000 and then you put it in bank A. You go to the bank manager and say, well, I'd like to just put this in a CD and have you lend me the $1,000, you hold the $1,000, and I'll pay it back if you report it to the credit history. And then they cut you a check for $1,000 because they already got your $1,000. They're not going to lose any money. And you go do that bank round robin. You do it to bank B. Do the same thing. Yeah. And put $1,000 in. But you got to make sure they report to the credit history. Do you think that's a good idea?
I actually do. The one thing you got to remember is that would be called an installment loan.
Right.
So when you're building credit, there's really only 3 types of credit out there. There's installment loans, which is like what you're talking about, or a car loan is an installment loan. Revolving credit, like credit cards, and then a mortgage, any kind of mortgage. So those are the 3 types of credit that you can have on your credit report. If you just do the CD loan and you don't do some revolving credit too, it will be a slower process, and it won't build up your credit as fast. So you got to do both at the same time.
Now, there's one other trick that I learned a long time ago to help my tenant buyers get a mortgage is you get that secured card, you do that bank round robin, and one other thing you can do, you can take your secured Visa, because you can't tell by looking at it that's secured, right? It just looks like a regular old Visa. And you go up to JC Penney's, not Sears, but JC Penney's, and you say, I'd like to get an automatic charge for a very small amount, like $200. And if you do that, they'll take your Visa. They won't pull your credit, actually. They'll just give you a temporary cardboard card. You go buy some socks or something and then pay it off that day. You charge it, pay it off, go back up to that window and pay it. And the credit report's going to see, an open account, a charge, and a paid in full. Now, even if they deny you a permanent card, at least they've seen some activity on your credit report. Is that a ploy that you can use to get some kind of revolving credit once you get your secured Visa?
I would say that is the least of the three that we've mentioned just now. That's the least impact on your credit. Okay. And the reason is that they want to see at least 6 payments in a row for any kind of credit. If you do the CD loan, don't close it out for at least 6 months. If you do the credit card, you got to make at least 6 payments. They want to see at least 6 payments. And that's not the banks. That's FICO who's looking for that.
Right.
So that's who you got to think about. And that brings up a whole other topic of who FICO is and what the FICO score is. And we don't have to talk about it now, but FICO is the one that we're trying to cater to and please right now and look good to. You know?
So how else can you make FICO look good besides what we've been talking about?
Well, another thing that you want to be careful about with FICO, of course, we've talked about payment history, which is they're going to look over the last 2 or 3 years more than they look at they look at backwards forever, but they emphasize the last 2 or 3 years.
Right.
Okay. They're going to look at your payment history. The other thing that they're going to look at is inquiries.
Right.
Okay. They're going to see, have you gotten a lot of inquiries? One of the mistakes that a lot of people make is they'll go over here, get turned down for credit, go over here, get turned down for credit. And because the average consumer, and no blame to them, but we're not taught this in school, or where are we taught this stuff, growing up? But the average consumer doesn't realize that you go to all these places, they're still pulling from the same 3 bureaus, and it's always the FICO score, and so FICO is FICO, and TransUnion is TransUnion, so the information is coming from the same place. Well, I think we were talking about the credit bureaus and how the credit bureaus are going to be reporting the same information no matter where you get your credit pulled. So you can go to Sears and apply for a credit card, and they're going to have the same score and the same information than if you were trying to buy a car at Toyota and you pull your credit. Once you know that your credit is low and that you've got issues and the score is not as high as it needs to be to get credit, stop pulling your credit, because those inquiries are going to have a negative effect on your credit score, make it even worse. Okay.
Yes. So that rule about inquiries, if you know that you got a problem, stop.
That's right. That's right. And the other thing is, now I do want to have one little disclaimer, or not one little disclaimer, let's call it a myth buster. Okay.
Yeah.
People think that every time you pull your credit, there's a ding to your credit report. And that is a myth. It's not a tit for tat. You pull it, for every time you pull it, it makes your score go down 3 points or whatever. It's not quite like that. It's a lot more convoluted and involved in that than that. Depends on what you're applying for credit for. Depends on how much you pull credit in a certain given time. There's too many different factors involved. So a person doesn't need to be afraid to pull their credit. That's a myth. But what they do need to be careful is not pulling it often over a 12-month period. And once they know their score, don't think it's going to be different just because you go somewhere else to pull it.
Right.
Yeah.
Okay.
Yeah. Yeah.
So it's kind of like your blood pressure. It's kind of like your blood pressure.
I know where you're going with that. That's a good analogy.
It's a good analogy. One blood pressure meter is not going to change too much from the doctor's office to doctor's office. And if you need to change that with diet and exercise and some medication, well, that's maybe what you need.
That's right. That's right. Same with cholesterol. You can get your cholesterol checked at 3 different doctors, but it's going to be pretty close, the same. That's a good example. Now, another factor that affects our FICO score that FICO looks at is going to be your debt to limit ratio, or your utilization ratio that we call. So if you have a credit card.
I want to just interrupt you here a little bit.
Go ahead.
Because, it's so interesting to me, this particular subject you're talking about. A lot of people don't realize that they can hurt their credit score if they max out their cards.
That's right. That's right. And they don't realize that if you are getting ready to go apply for something like a car or a house that needs good credit, then one of the first things you can do, and this is free advice, you don't even have to come to a credit repair specialist to do this. pay down your current card. Don't go pay old. I don't mean go pay charge-offs and collections. You got to be careful about that. That's where you need somebody like me, so we do it strategically.
Right.
But current, good standing credit cards, pay them down below 25% of the limit, and your CIO score go up 40 points just from doing that.
Isn't that amazing? You see,
it is.
It's not logical, is it? You know? There's no logic to that FICO score. I mean, they got their own way of doing things, and if you do it their way, you win, and if you do it your way, you lose. So do it their way.
Well, I'll tell you another analogy, since we're big on analogies in this particular show. When I was in college, and I had 5 different classes in one semester, I had 5 different professors, and each professor, and that's one of the beauties of college versus like high school and all that, each professor can design the class they want and design the grade structure, and one cannot care whether you're tardy and one could. You have to get to know each professor and what each professor wants in order to get a good grade in that class, and it's the same thing with FICO.
No, I
FICO's game.
I totally agree. I was lucky enough to give a lot of speeches when I was in my 20s and 30s, and I went back to school. I didn't graduate my undergrad degree until I was 35. And, cause I didn't need the degree to be self-employed. And, so as a 35-year-old non-traditional student with a lot of my co-students, my fellow students who were in their early 20s, I was the old man in the class. And, and I taught, how to give a speech, basically because I've given so many speeches, and I basically didn't have a degree to teach the course, but because of just experience, the communications department allowed me to, just do that principles of speech, because it was all performance based. It was all getting in front of people and talking. So anyway, I said, look, if you want an A in this class, you need to go an increasing, get better every week. If you start off with a bang, you can get an F in this class. And because you're lazy, because you haven't put the time in, you haven't focused, whatever. And then I gave them all personality tests. This is just a little aside. And all the extroverted ones, they could speak real easy without a lot of work. I told him, I says, look, you could sell ice to Eskimos, and I'm going to hit you hard on your content. Because if your content stinks and you haven't done your research and you've stolen it from the internet or something, I'm going to find out about it. And all you shy people over here that would rather work in a back room than getting in front of people and talking to them, you're introverted ones, well, I'm going to be easy on you. You just have to keep getting better every week. And it's kind of like that. FICO scores are funny. If you get coached on what they want to see and the strategic, like you were saying with charge-offs, you got to be very careful when you have a debt on a credit card, whether it is a credit card debt or an IRS lien or a student loan default, whatever. There are ways to handle those in a good way that's going to help you quickly. And then there are terrible ways to deal with those, right?
That's right. One of the worst things you could do is go raise a laying, I call it, wake a lying dog, or, is because it's an old debt, 3, 4, 5, 6, 7 years old, and you have not communicated with the collection agency or the creditor for years. And suddenly you say, all right, I'm going to fix my credit. I'm going to go call up all these old debts and just start paying them off. Well, first of all, by starting communication with them, you started that clock over again.
I know.
So
isn't that terrible?
It's terrible. But I mean, I told you that the Fair Credit Reporting Act says negative stuff only has to stay on there 7 years.
Exactly.
But if you got a debt that's 5 years old and you call them up and you say, I want to settle my debts. Well, you just started that. You just lost 5 years. You started that clock all over again.
So let's say we had somebody that, Blair, that left the country and wasn't in the United States credit system for a few years and came back. And he had some, prior history and maybe some debt that wasn't paid and charged off. What would you tell that person to do?
Well, that's a very good question. I want to kind of retract just a little bit. It made it sound like I was saying don't contact them or call them at all.
No, but there's a way to do it. There's a way to do it.
Okay. Mm-hmm. First of all, don't do it unless you've got the money and you're ready to pay and settle right there. Okay. Exactly. So no sense calling them now if you're not going to have the money a year from now to pay them.
Not going to help.
It's not going to help. Second thing you need, so you got to be ready. You got to have the money and be ready to deal with them. Mm-hmm. Second thing, don't give them any money over the phone. Mm-hmm. I mean, if they ask for a credit card or something over the phone, don't give them your card and make a payment over the phone. Mm-hmm. Third of all, I suggest everything in writing. And actually, this is part of my services. Okay. So somebody could do this themselves, but I do this for people. Mm-hmm. But the best thing to do is do it in writing, not on a phone call. You don't want some $12 an hour person from Philippines handling your account and making deals with you on your past debt. And then the fourth thing that I would advise them is, and this is going to be harder because they don't have the knowledge that I do about the credit system and how it works, but you have to choose which ones. If you got 5 of them, you're not just going to call them up randomly. There's going to be some that are going to have a greater impact on your score if you take care of them than others, and so you got to be strategic about it. Yeah. Right. But again, that's the kind of work I do for people, and it takes a lot of time, Brian. Mm-hmm. Follow up, how to write the letters, who to send them to. Yeah. It's a lot of work.
Another analogy would be, it's similar to like a debt negotiation service that knows the Fair Debt Collection Practices Act like the back of their hand, and they're just trying to do debt settlements and prevent a Chapter 7. And that kind of work is similar to what you're doing. But the bottom line is, when I get somebody that wants to get a mortgage, I want a professional in their corner on their credit report as first thing. Second thing is, it's almost like consumer credit counseling because we've got to budget their money. They got to pay down debt, which is a priority, but pay down the right debt is what you're talking about, and also get some savings going, and actually kind of live simpler until they can get that mortgage, because cash can solve a lot of problems. Even if you go to Home Depot and work one day every 2 weeks and put that money in a jar. You've got to find a way where home ownership is that important to you that you're willing to take just a tiny bit of your free time and go get some more money with that time, and put it in a jar. So, not everybody wants to. That's too painful for some people. And when I try to pre-qualify the attitude of one of our tenant buyers that are renting for a while and then trying to get a mortgage, I got to see how real serious they are. They might yes me to death, and then not sign up with you and then not pay it, and I don't want that. I want them to know that without this service, you're not going to increase your FICO score. If you're not going to increase your FICO score, you're not going to get the mortgage, and I'm wasting my time with you.
Absolutely, and I'll add to that if someone just started paying off debts randomly, that they may get out of debt and they'll quit getting the harassing phone calls, but their score won't go up. You got to know what to do to get your score to go up, so that you're not only getting out of debt, but you're getting your score up. And a lot of things are. Sorry. Well, a lot of the things that someone like I do is, I've already alluded to the fact that I don't address every old debt. Some things you just leave lying. The other thing is that I make sure everything on there is accurate and being reported, correctly and can be verified. If it's not, a lot of times the creditors and the big three bureaus will just delete it because they can't verify it. It's so old. So some things may just come off and be deleted because they're old or they can't verify it. And then whatever is left after that, then we may have to start doing some of the, like you said, the debt settlement type negotiating and all. Yeah.
And you can't do any of that unless you get the money. Because they won't take a payment plan. They want chunk cash.
No.
Even if it's 20, 30 cents on the dollar, they want it paid in full. And so if you're better off saying nothing and putting that money in a jar till you get like 30, 40% of the debt in your hand.
Right.
Here's a question. What if somebody has an old defaulted student loan that's been sleeping on their credit report? Any advice for that? Because they can't pay that off in full.
Student loans are kind of an entity in themselves. First of all, if you let it lay dormant too long, they'll come after you and garnish your wages. Yeah. Okay, and you don't want that. Same with child support, back child support. They'll start garnishing wages. But let's say it hasn't got to the point of that yet, and let's say that you just you haven't made a payment for 8 months, and it hasn't got to the point of them garnishing, and all that. They will let you just start. One good thing about student loans is they'll let you just start right where you are. You don't have to make back pay. They'll work out a deal with you where they take those payments and tag it on the end, and you can start up and start making payments on time. Now, where I can come in on credit repair is help them get some lates. Like if they were late, say 30 days late a year ago, I might be able to get that late deleted, so it doesn't affect their credit score as much.
Okay. What about, like one of the scariest problems? I had a client that he had an IRS tax lien on his credit report, and he didn't have a good credit coach at the time. And is there what advice would you give somebody for that?
There again, it's just a matter of knowing the laws, the IRS laws, and with medical laws, you have to be familiar with HIPAA, with mortgage laws, you have to be familiar with RESPA, with consumer credit, you got to be familiar with Fair Credit Reporting Act, with the laws, what you're talking about. You have to be familiar with the IRS laws. And the IRS has a new law that says if you will make a payment arrangement with them on any kind of federal tax lien, and then after you've made 3 payments in a row according to that plan, you can request for it to not be reported on your credit report.
Wow, that's pretty good deal.
It's pretty good, but you gotta contact the IRS, or I do it for the client, one or the other. Make a payment arrangement and then make 3 in a row, and then by the 4th month you can say make the request, and they'll quit reporting on the credit report.
Now, when you say quit reporting, will they say that they won't answer an investigation, or they just won't report?
They just won't report new information, which means that it will come off of your credit report. It won't be on there. It won't show up.
I see. Great.
Yeah.
That's terrific.
Yeah. Isn't that great? Now that's only with IRS, not property tax liens and local tax liens. Those are a completely different story. Yeah.
Sure. No, I understand. Now, do you have a service if people are ghosts and for some reason they pay cash for everything, and they're 28 years old and they have no credit at all? I know that doesn't happen very often, but maybe immigrants or something like that, they come into this country and they need to build a credit rating. Do you have any service that helps them do that?
I do have a building credit program that we use, but to be honest with you, that's free.
Oh, great.
We don't really charge to do that. If somebody just says, I don't have any credit, where do I start? I don't mind sitting there and talking to them for 30 minutes and telling them what they need to do to build credit and point them in some directions, because I primarily am a credit counseling, credit restoration, credit repair, whatever word you want to use, company to help people who already have, credit problems.
Okay. Let's just touch on a little bit. If somebody wanted to hire you, and I know every case is different, but if you could give some ranges of the investment they need to make to get the kind of results, and what kind of assurances can you give them that they're not going to waste their money?
Right. When somebody comes to us, the first thing I do is I do analyze their credit report, and I audit it, and I analyze it according to FICO's eyes, basically. Like, how would FICO look at this? I come up with a plan. That plan's going to involve both dealing with derogatories and trying to get, some good positive credit on there. I scope out about how long, I estimate how long it's going to be. You said 4 to 10 months. That's perfect. I tell people this is either going to be closer to 4, 5, 6 months or closer to 10 months. I kind of give them an idea. I can't guarantee, but I give them an idea. And then if they fall within our typical client profile, then we just put them in our standard program. And a typical profile is somebody that maybe needs somewhere between 50 and 100 point increase, and they've got anywhere from 5 to 15 derogatories on the credit report that they got to deal with. That falls within our typical profile. Okay. And so that cost is going to be $189 the first month, and then $89 a month for 4 to 10 months, depending on, like you said, whether it's more of a 4, 5, 6 month deal or a 10-month deal. Okay. And so it's really pretty reasonable. Some people tell me I'm too cheap, but
Well, if the law, what is it, a scale issue? I mean, if you got 100 new accounts a month, you're running a nice little business. And that's every month.
Yeah. So and I do have a couple assistants who I pay, and that kind of stuff. So
sure. Well, I think you should try to. Well, we're going to get this video out to our rent-to-own clients that will help them, wrap their arms around, whether or not they want to make that kind of investment or not. Right. But, if you want that car or you want that house, you're only talking about what we usually spend on a weekend for dinner. We're not talking about, $500 a month for 10 months. We're talking about under $100 a month. And, and I just tell my people in the house, and says, look, what are you spending? I talk to the woman, what are you spending at the beauty parlor? And I'm talking to the guy, and he says, what are you spending at the bar? Or what are you spending at the gym? Or what are you spending, on cable? Where's your money going? And this is going to allow you to get the credit for the things you love forever. This is going to allow you to get the credit to be able to live in the neighborhood so that your kids can go to the right schools. Yeah. If you think that's too expensive, then what you care about is probably not in the right box. It's just that simple. This is such an important aspect. And the same thing is we take getting your credit sorted and getting your savings sorted and getting your rent-own home sorted and making those payments perfectly on time. We're really overhauling their financial attitude, and that's That's just the way it is. We want people to have their dream home and to be successful financially. And my background in financial planning helps a lot because a lot of these families don't have any life insurance at all. I mean, zero.
Mm-hmm.
And their kids are young. And it's like, get $100,000 of term. It's nothing. It's less than $20 a month under 40.
Yeah.
I mean, it's a silly amount of money. So, I'm really, really happy that we're kind of networking here and letting people know that your service is available. I think it's one of the most cost-effective credit improvement services that's out there. And, please don't raise your prices too soon.
I won't.
Because, we want to be able to let people know that dollar for dollar, they're getting a great value.
It's been the same prices for 5 years.
Well, you got to pay your cost of living increases and your retirement funds. So, just at least lock it in for our clients anyway.
I will. Don't worry. I will. Brian, there's a couple of my competitors here in the Dallas-Fort Worth Metroplex that charge as much as $2,000 per client.
I know.
And so I think $700 or $800, is very reasonable.
Well, it's all about results, and if you get the results, it's priceless. And they pay $5,000 for it or $10,000 for it if they can have the privilege of having a high FICO score. And believe it or not, a good credit rating actually helps you get a better job because you are considered a better person and a more trustworthy person. So that credit rating just carries over to many different areas of your life. Blair, we'll have your email and your website underneath this video, and they'll contact you directly. And you usually ask them, how'd you hear about us, right? When you get a phone call or an email, because we're going to have, tell them that that I referred you, and at least you'll get a handle on where your lead's coming from.
Sure.
If you do you deal a lot with Texas, or are you national, or what's your?
Here's the deal on that. We are in Texas, and DFW has enough business to keep anybody busy, with 5 million people or whatever, But there's no laws that regulate credit repair on the national level, only on the state level. And so the Credit Repair Organization Act, CROA, just says that if we're registered and bonded in the state that our corporate headquarters is in, that you can do business in all 50 states.
Okay.
And we are set up to do things electronically. Our client agreement can be sent and filled out online and e-signed. All my clients are given a portal to their back office to see what's going on and communicate with us. And actually, be honest with you, even here within a 30-minute drive of my office, probably 50% of my clients never come in. We do it all long distance. People are just getting more and more, internet savvy and remote savvy.
If you run into anybody that is renting right now and that would like a rent-to-own home, please refer them to us because we actually do the same thing. We use DocuSign, and our attorney closes with the seller and closes with the tenant buyer over the internet. And we do all 50 states. So it's just, more and more agents and attorneys are using for signatures DocuSign, EchoSign, all
I
these
use
electronic.
EchoSign.
Yeah, Adobe.
Yeah.
So, we just look forward to having a fun relationship with your company, and I thank you so much for your time today.
This has been great, Brian, and I'm looking forward to it too. You think like I do, which you believe that people should be in a home, and I can't tell you, and I'm sure you got hundreds of stories too of how many times when people get out from renting and then they finally own their own home, it seems like, it may sound simplistic, but it seems like that is the impetus that's needed to make the rest of their life just begin to be better and be more successful from that point on. You know, it's home ownership is very important to families. It really is.
I do agree with that. I think it creates a greater sense of belonging to instead of a transient sense of where you are. You also feel safer when you own your own home, because anybody can sell that property from underneath you, even if you have a lease.
Good
so
point.
when you are on the deed, you really do have a stronger foundation in your life, and you have prestige. You can says, oh, I own my home. It's down on Frost Street, you know, and my kids go to the school
Oh, yeah. And when you've been in the same place for 10 years, that gives you a sense of stability, and you feel like you want to contribute to your neighborhood, and your society that you live in, your community. It's really a very important thing for people to do. And I like your program, and I'm not trying to we didn't plan this for me to plug your program, but I think rent to own has many advantages, but one that I like about it is that if you've rent to own and you've rented a house for 12 months and now you're applying for a mortgage, you've already shown that you have the financial ability to make the payments. So the mortgage person who's doing the loan and the underwriter should feel more comfortable because they see that you're buying the home that you're already been renting, and the payments are probably even going to go down. But even if they stayed the same, you've shown that you have the ability to do that. So you're a less risk than someone who just comes in and doesn't have that record. So you're actually giving some history to your underwriter.
Exactly. What we try to do is to figure out a PITI at 97.5% of value, and figure out the PMI too, and that would be basically their payment. And so, but let's say we had a $200,000 house, and let's say market rent was $1,200, but PITI payment was a little bit more, maybe $1,400. Well, we'll try to get them to pay that $1,400, but the excess of market rent will be applied toward the purchase price as an option payment.
There you go.
And that allows them, as you were alluding to, the habitual behavior of paying that full payment and then working toward reducing the purchase price as they're paying market rent plus a little bit more. And that helps the seller because they would have to feed that shortfall between market rent and their PITI outgoings. So, that's a win for them. That beats renting. And when we advertise the property, we will advertise at market rent, but we'll also say there's a rent-to-own payment that's small above that every month that's applied toward the purchase price. So that helps, and you probably, with your mortgage origination background, understand that would be looked at after 12 months as more of a refi application than a brand new origination.
Yeah, it really adds another layer of security and another layer of confidence on the buyer and the potential lender in the future. And if you're working on your credit at the same time, I mean, you're doing everything in a positive way to get in that house.
Yeah, there's one other thing I wanted to add. One of the greatest pitfalls in rent to own, especially you've heard some horror stories about sellers getting money from somebody and then not paying the underlying lien. That's a scary thing for the buyer. And we've fixed that because all the money goes through a third-party payee service and gets the principal and interest gets paid, the taxes get paid, and the insurance gets paid. If there's any excess, it goes directly to the seller. The seller can't, abscond their responsibilities by not paying the bills on time.
So they're not going to be forced out. Yeah.
Well, how'd you like to get a knock on the door, and says, look, I've been paying this thing for 8 months. He says, yeah, but it's under foreclosure. Here's a 90-day notice. And
That's right.
in these uncertain times, it's a real scare for a lot of buyers. And the other thing they worry about is, well, what if I can't get the mortgage after 12 months? We always give them at least one more extension of another 12 months. So they're not going to get kicked out, and they're not going to lose out on their option money that they put down. So, Blair, thank you so much for your time. And
you're welcome.
And we'll try to cross refer, and it's been great.
Been fantastic. I look forward to more of these. We'll talk to you later.
All right, thanks, Blair. Bye.
Bye-bye.